Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome back, everybody. So our longtime listener, Josh, emailed in to realestateandmortgageshow.com this week and was asking just for an update on Bill C-4.
Yeah.
So for those who aren't familiar with it, do you want to explain it quickly, Paul?
And Bill C-4, is they came out, they talked about it in March of 2025 about having a GST rebate, so the 5% off a brand new build for a first-time home buyer. And then the federal government jumped on top of that as well and said, well, you know what? Federal's 8, right?
No, the provincial.
Provincial,
other way,
but they did it in the fall. They waited till the fall.
That's right. So they jumped on it too and says, well, you know what? We'll piggyback off you and jump another 8. So now we have the full 13% HST savings on a new build for a first-time home buyer.
Well, that's the proposed bill.
That's the proposed bill. And then, we've been waiting since March, March 20th. So anyone who bought a townhome, a brand new build as a first-time home buyer, March 20th, you are still eligible. 2025, you're still out. But we're coming up on a year now. Mm-hmm. And so we thought yesterday it was getting done because the bill passed the third reading. And the next step is basically Royal Assent. You get that stamp and you're good to go. There was a bit of a glitch, though. So the first 3 phases of the bill has been passed, which is also the tax exemption part is passed.
That's the meat of the bill.
That's the meat of the bill. The problem being was the 4th section. In order to receive the Royal Assent, both the House and the Senate must pass this bill in identical form. So what's happening with that Schedule 4, it's literally, this is what we call a financial bill. Schedule 4 has nothing to do with the finance part. So they're either saying...
What is it, an elections act?
No, it's a privacy. Yeah. It's a privacy act. Yeah. So they're basically saying either take it out or amend it. Now, we're 99.9% there, and we're hoping next week. However, they don't sit next week. So it's probably going to be the week after. But to answer Josh's question, we always said at the end of February we're going to have an answer. And I said, you know what, we're probably looking at March, maybe April before we get that answer. I do believe the answer's not going to come next week, but I do believe it's going to come the week after. So we should have the Royal Assent on this Bill C-4 that will save a first-time home buyer on a brand new build 13% HST. You look at
Don't say will, should.
Will.
Yeah.
So you look at, let's say, a $500,000 townhome. You're saving 13% off that, which is, Frank?
$65,000.
$65,000. And the bill goes up to $1 million, and it goes it basically goes to 2032. So it gives a lot of opportunity for first-time home buyers to jump into a new build and save a lot of money. Keep in mind, there's also a little caveat to that, would be a divorce. Someone who is divorced and hasn't owned a home in the last 5 years is considered a first-time home buyer. So
really, I was not aware of that.
Yeah, so you are as a divorcee, if you haven't owned a home in the last 5 years, you're actually qualified for this bill as a first-time home buyer. So,
are there any other groups that qualify that don't seem obvious?
Just for the record, Paul, for us to get a mortgage, as long as we can provide them with a separation agreement. So if if a couple breaks up and they own a matrimonial home and they're breaking up, they don't have to go the 4 or 5 years without owning a home. They would qualify as a first-time home buyer right away, as long as we can provide a separation agreement.
Great.
Now, I don't know how that's going to work on as far as the new builder and the rebate, whether that counts. Certainly, the RSP home buyers withdrawal is one of the more popular ones. And somebody can withdraw from the RSP as a first-time home buyer if they've got a separation agreement, as long as if they had purchased a previous home, that the balance, whatever that was outstanding, if they had taken money out of the RSP, had been cleared. If you're still having to pay back on that one, then you can't take money out of the RSP again. So,
but this is exciting news. I mean, I've said before, the 30% of our market is first-time home buyers, and so that's a good chunk of our market. It's a large segment of our market, and we need that segment going in order to help the move-up buyers and then the move-down buyers. But over the last, 5 years, during the COVID years, when the rates were sky high, prices were sky high, that segment of the market disappeared. So they're trying to give them every advantage for first-time homebuyers to jump back into the market, which is very it's attractive because it's going to get the market going, which is awesome. And this bill, we've been waiting almost a year for this to be cleared.
It's March 1st tomorrow.
Yeah, but I've had a lot of calls from people, and I think even Josh was one of them. We actually had someone call in a little while ago, or write into our realestateandmortgage.com, basically saying, I'm in a lot of trouble if they don't, backdate it to March 20th like they said they're going to do.
Yeah.
Because I was banking on that $30,000, $40,000, $50,000, $60,000 rebate. Well, guess what? It's going to happen. The bill we were hoping was going to be passed this week after this news came out. Didn't happen. Will not happen next week because they do not sit. It should happen the week after. Don't quote me on that, but I'd be shocked if it doesn't happen because we're literally at a small part of the bill that should happen with a quick amendment or a quick deletion, and then we have that Royal Assent on that bill, and that is into effect, which will be amazing news for the market.
I just want more details. That's all.
Yeah, I was just going to ask, do we have details yet of how the rebate is?
Anything whatsoever, and I've talked to the default insurers because obviously they're heavily involved in this because they're going to need to fix their systems to make sure that their systems acknowledge that if somebody buys a $500,000 townhome and they're getting this $65,000 rebate, HST rebate, so now is the purchase price $435 or is it $500? What do we go by? That's the information that's critical, and it's critical from a financial standpoint to qualify. Somebody may qualify for $435 but not qualify for $500.
Right.
So is it a rebate? Or is it going to be just that it's just knocked off the purchase price? So
well, and even working with Charles with Clement Homes,
he doesn't know.
But we're trying to figure it out. I mean, we follow it. Glenn, who's been on the radio, but Glenn from my team is literally like a nerd on this. Like he's following.
That's his own words, by the way. Everybody.
That's his own words.
He sent an email out yesterday to the team saying, "I've been nerding out on this for."
He follows it like a hawk, and so what we're dealing with Charles from Clement Homes on this too, and he's like, okay, when this comes out, can I start advertising my townhomes, let's say, at $435, or do I have to advertise them at $500? Well, here's the thing. If you advertise them at $435, I don't qualify for the first-time home rebate. So am I getting that for $435? So there's that caveat where, like, what do we advertise it at? What is the actual price? Because it's $500 for me, but it's $435 for you, Greg. Like, there's still rules around what we're doing. What are the parameters? How do we advertise this? Is it a cashback or is it just off the price?
How does the rebate come? I don't even think we
at the lawyer's office. I mean, the land transfer tax is a rebate, but it's an instant rebate at the lawyer's office. But should it be a credit or should it be a rebate? And we don't know. I mean, those are the finer points that I think are critical. And then on top of that, I mean, you talk about the first-time home buyers. If we can somehow get those interest rates a little bit lower, get the interest rates pre-COVID. 2019, you can get a 5-year mortgage at 2.89%. And that is when the market was normal. The economy was normal at the time. Everything was just humming along just right before COVID hit in early 2020. So if we can get back to those types of interest rates, specifically because house prices are as high as they are, but if we can get back to those interest rates, I think our real estate market will be much healthier as a result, because the last thing we need right now, and the banks can talk all they want, and by the way, they all reported very, very healthy profits this week, so none of them are hurting. But at the end of the day, what the banks don't want either is to see what we're starting to see right now, which is if house sales are down, then the values are coming down, and therefore the equity's eroding twofold. Number one, the purchaser, the owner, now their equity's eroding, but more importantly, there's a risk to the bank and the financial institution as well if that property continues to come down, where maybe they're in a position where they don't have enough equity in the property.
If it's a 5% down initial deal.
Now, the default insurers, like the banks, are not worried. When it's default insured, the default insurers who are CMHC, Sagen, and Canada Guarantee, they're the ones that are a bit more at risk, obviously, because they've insured the mortgage. That being said, listen, the CMHCs, the Sagens, the Canada Guarantees are also very, very healthy. They've done very well in this market. They're very responsible. They've got it set up properly where the risk level to them is very minimal, and the market would have to plunge across the board. Not to mention, the market not only has to plunge, but people got to walk away from their homes. That's when they're at risk, because if people just say, whatever, it's going to come back up, we'll just stay in the home and we'll continue to make the payments, then there's no risk.
Right. just a caveat to this bill C4 that's coming into effect for sure, but just a caveat to that. My only fear with this is the suburbia markets that have a lot of new home builders in it. You're looking at the Orleans, the Canadas, the Barhavens, Findlay Creek, Riverside, Stittsville, Riverside South, that has a lot of new home builders in there. So if that new home builder is now selling this townhome, let's just use $500 as a price, this $500,000 townhome for $435,000, but I have a resale townhome, I can't discount that $65,000, my resale one. So I'm just a little bit cautious about what may happen to the resale market when you're in a community with a ton of new home builders.
Much newer communities where there's still building going on.
Yeah. So
you're right? If you want to sell your townhouse that you bought for $500 2 years ago, and let's say the property hasn't gone up in value, it's remained flat. If I'm a first-time home buyer, am I going to come and buy a resale for $500, or am I going to go buy a new build for
I'm taking my 13%.
I'm taking my 13%. So
sure.
It is going to impact the value of homes.
And I don't want to be a glass half empty type of guy. I want to be a glass half full, but I'd be naive to think that it won't have some impact on the resale market centered around new home builder sites. So, like I said, a lot of the suburbia markets where they have a lot of new home building. Now, the older established neighborhood that don't have the new home builders, it's a total different story. But at the same time, you said it, Frank, like, if I bought my townhome for $500 and I'm putting it on at $525, but I know I can go to a new home builder and get one for $435, it's going to impact that resale market 100%. And I don't know if they kind of thought of that, or maybe there's going to be some different financing options for resale market compared to a new market. Maybe. I don't know. I'm thinking.
Yeah, I don't see that. But what I see is what they're doing is they're almost forcing someone's hand to say, you're moving into this house, and you're not doing it as a flip, so you're not going to continue to do this. We're opening up a door for a first-time home buyer to be able to get into home ownership, and you're going to stay in that home for 5, 7, 8 years, so that really the value is going to come back up. And by the time that neighborhood's built up, then those rebates aren't available anymore, and therefore the value will go up to what it normally would be.
And we're talking this program is going into effect as of right now. It's going into effect till 2032. So it doesn't have to be done now, but, people who are thinking of buying a new build, a first-time home buyer in the next, 2, 3, 4, 5, 6 years, you will most likely still have this program unless something drastic happens. So it will help the will help the first-time home buyers in the new builds for sure. And it's kind of unknown what's going to happen with the rest of the market around this program, but we will see.
Will it help builders get shovels in the ground? Will they be more incentivized?
Well, put it this way. The first message I said to Charles, Charles, this is coming. Get those shovels in the ground. I need product to sell. Get those shovels in the ground. And it will. Hopefully it will help get more shovels in the ground. I mean, to have this program and then still put the red tape on getting shovels in the ground for builders is absolutely stupid and useless, right? So let's get some shovels in the ground. Let's get more building going on. We have loads of people coming into Canada, every single day, every single month. We need shovels in the ground to get this program and this economy spurred.
All right. And assuming that this bill does go through, which Paul is guaranteeing.
No, I'm 99.9% sure it's almost there. It's like it's like a little tiny piece of red tape that they just have to rip off, and it's over. Yeah.
Oh, does that encourage builders to build a more first-time buyer-centric product like townhomes, like?
They already are. I mean, you take a look at builders now, you walk into any subdivision and you don't see the big, massive singles anymore.
True.
This program goes up to $1 million, right? So most homes are $1 million and under. So, that shouldn't be ringing. Sorry. It's a client ringing. But anyways, it will impact that big time. And builders are already starting to build the townhomes, the condos, the terrace homes. So the first-time home buyer product will still be the most popular, and that's why I've said this year the townhouse market, the townhouse segment of the market will be the hottest part of the market.
Right.
It's still a little stagnant right now, but if this bill comes into effect, it will help the townhouse market.
Pop. If you have a question, head over to realestateandmortgageshow.com and submit it there, or head over or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back, everybody. So, Frank, with kind of prices being a little softer in a lot of markets, like Paul talked about earlier, with double digits down in a lot of markets. Mm-hmm. How are lenders kind of responding to that? Are they being stricter on lending? Is it stress tests?
They're always strict. It's too strict. I mean, we talked about earlier on in the show where the delinquency rates are so low that I think they're too strict. Now they're following the guidelines. Some lenders are a little looser than others as far as, interpreting what the guidelines are. So, so when you have files like that, you deal with those lenders. So you'll work with those lenders where other ones are just hard, fast. Here's our rules. No exceptions, no nothing. So I had one where this week where she had a couple of, and by the way, when you're doing your mortgage renewal, some lenders do a credit check on you. So they reached out to me and they said, Frank, just want to let you know that this client has got a couple of collections. And I call the client. I say, you're not going to get us a competitive rate because they're credit bureau on you and you've got a couple of collections. And she said, what are you talking about? So I said, I'll pull the credit bureau on your behalf if you want. And I pulled it and I said, here's the 3 collections. And she goes, I don't deal with any of those companies. So it wasn't her who did it, but it impacted. So again, I mean, this is where relationships matter. And, in my case, I happen to be very close with the lender. And I reached out and I said, hey, I think there's an issue here. And by the way, her dad, who happens to co-sign on the mortgage with her, is worth over $2 million. So, I need you to price it accordingly. And they were able to do that. But these are the kinds of things, from a risk standpoint. Some of these lenders just don't take any risk whatsoever. And it makes it difficult, specifically for first-time home buyers. We're not seeing the investors. I mean, we go back 6 years. Townhouses were bought by people. So what a lot of people would do, a lot of couples or single individuals would do, is they bought their townhouse, lived in it for 5 years. They built equity. They're going to pull some of the equity out. Now they're going to buy a single home. And they're going to keep that as an investment property. We're not seeing that as much anymore, right?
No, it's harder to afford both now, right? It's sure. Just harder. So we're not qualify. Yeah, so we're not seeing that as much. We saw it a lot where people, and we loved that when we were like, most realtors would be like, well, you would have got 2 sales out of that. I'm like, no, I want to see someone build wealth.
So right.
Be successful.
The way to build wealth is, listen, I've built $200,000 of equity into my townhome. I take out some money, put the down payment down on my new home. I keep this one as a rental. We were seeing that 6 out of 10 times. 6 out of 10 times that was happening.
Now
it's maybe? Like once or twice out of 10 we're seeing that. And it's because it's just harder to qualify. It's harder to carry both.
Right.
And people are so tight that if they're ever in a situation where they can't find a renter, they're in trouble, right? Because now their mortgage still has to be paid. So it's not happening as much, which is disappointing.
Right.
I mentioned that 30% of our market was first-time home buyers. Well, you add another 15% of that would have been investors. That's probably dwindled down to about 5% now is investors.
If.
So that's really dwindled. Whereas, like I used to love telling people, the more doors you can get, the more wealth you're going to build. Like I would just push and push and push to tell people to keep doors and buy doors and buy doors. And now I still believe real estate is the best way to build wealth in the world.
It's going to take longer.
It's just going to take a little longer, and it's a little harder, and there's a little more risk now. But I still say it is the best and easiest way to build wealth.
Well, you've always talked about time is the biggest thing in it. Like you can't buy a property and hope to get out of it in 3 years or 4 years. It's buy and hold.
Real estate's a long-term game. I mean, most of the investments I've kept for years and years, if not decades. And then that's the easiest way to build wealth and retire wealthy, right? Is to do that. The flipping game is pretty much dead. I mean, the anti-flipping tax and trying to find the right property and trying to make a profit in the flipping game is really, really hard. But the buy and hold game is still alive. It's harder, but it's still alive.
All right, Frank, you had an event this week.
Well, our industry did, so unfortunately I wasn't well enough to go, but our industry did, and big congrats to Debbie Belair and our whole mortgage industry, but I also want to give props to the real estate industry because there's a couple of real estate offices that joined this event as well, and basically what our industry does across our country, strike it out for cancer. So basically it's a bowling event that happens. It happens across all the major cities. 7 of the 9 cities that are doing it in Canada have already done their day with bowling, and then 2 of them were supposed to happen this week, but they had snowstorms, so they postponed it. So we're not quite at the end of this campaign yet, but right now Ottawa is number 1 as far as raising money. So Debbie Belair, did a great job, and a little over $90,000, almost $95,000 raised just in Ottawa alone.
Amazing.
And then it gets matched, so we're just under $200,000, and the money stays locally for cancer research locally. So we do it across the country, but the money stays local.
The money you raise in your market stays in your...
Yes, it stays in your market.
Greg, you think we would have got the invite, eh? Like, we love our charity, and Frank just totally forgot about us.
Oh, you'll be in next year. Don't worry about it.
I was too busy to bowl this week, Paul.
Yeah, that's good. That's good news.
You were away, I think, anyway.
I was, right.
But anyway, but great event, and congrats to Debbie and all the mortgage brokers in our city that helped make this such a successful event. And again, we're... the goal was to get to $1 million. We're well in excess of that with the matching, and maybe we'll get to 1.2, 1.3 million by the time the event's over, which is amazing. So
great.
Frank needs at least 3 minutes for birthdays, and we're crunching time.
That's not true. Just
Frank,
3
birthdays?
3 birthdays. Just 3 birthdays. A good friend of mine, Franco Maringelli, celebrated his 60th birthday, so happy birthday to Franco. Isabel Anderson from our office celebrating her birthday, and my brother-in-law Mario celebrating his birthday this coming week. So happy birthday to Mario!
Amazing. I have 2. One, this deserves a double birthday week. Is one of the greatest joys I've had in my real estate career is my son joining me. And so Hunter has his birthday, which I'm going to mention next week because it's not till the 13th, but he deserves a double mention. My son Hunter, who's joined me in the real estate industry, which is awesome.
And he's doing open houses, you were saying earlier.
He's doing open houses and crushing it, and he's absolutely loving it.
He's out at an open house today, isn't he?
I believe it's Saturday or Sunday. I don't remember which one he is. He's out.
I don't want to say it.
I don't know because I can't remember which one it is. But anyways,
good for Hunter, though.
And then there's another one. One of the best people I've ever hired in this company, Mr. Greg Tilley, has a birthday on Tuesday, the 3rd.
Happy birthday. Wow.
Now, you're old as dirt, right?
No.
You're a month and a half older than me.
I think 3 weeks older than you.
Yeah, no, I'm April 22nd, so I know.
Oh, a little more, yeah.
A little more.
But Greg Tilley has his birthday, and I said to him, we were supposed to do a meeting, and I said, Jocelyn's like, can we do it Tuesday? And I said, no, we can't. It's Greg's birthday. Greg's like, I'm shooting all day. That's my birthday.
52?
52, you're
52.
right.
52. You know what, Paul, I mean, that means you're 51, going to be 52.
That is correct.
He looks about 5 years older than you.
Oh, whatever.
Thanks, Frank.
Don't let me take my shirt off, Frank.
No, I've seen your AI picture on social media.
Have a great week, everybody.
Have a great week, and please continue to support local businesses and charities, everyone.